I try not to be confused when I start my morning shows with you. I try to really dig in, take a look at all the information, evaluate, and then come up with a wise way of analyzing what's taken place, and then, produce my show. But this morning, there's a lot of confusion out there. One thing I will say, the one thing I am getting off the market this morning is the markets themselves, the equity markets are pretty darn resilient. This morning, the news is kind of mixed, and we'll talk about all of that in just a minute because there's a lot of reports out this morning. But the market went way down, fairly substantial down this morning, and then it's already picking back up. There's already bargain hunters coming in. And so it's a little bit surprising because I would say in general, there's a pretty good chance we're going to hit a recession, or at least, a few months of negative GDP. Maybe it won't turn into an actual recession. I think that markets need to continue to correct, but maybe they won't. I don't know. It's very, very weird. But let me just start with this. This is another quick analysis I had this morning. Do you know that NVIDIA is down 25% right now? I think that is the most relevant way for you to think about the fact that Tesla is down 44%. Both of them are down from their all-time highs. Both of them are extremely strong companies with extremely strong balance sheets, tremendous amounts of free cash flow, and massive expectations for the future. NVIDIA's PE isn't even in the ballpark of Tesla's PE. And so I would say that the market believes in Tesla. I know, shocking, right? The market believes in Tesla. They give it a massive PE. They give it plenty of love in terms of, so I don't know. I think the fact that Tesla's down 44% right now is, I'd rather it wasn't, but I don't think it changes anything. I think both NVIDIA and Tesla and the markets, all of those things could go lower. Would not be shocked at all. I think the economy is probably going to take a hit. And some of that might show up in the job numbers tomorrow, but maybe not. Maybe not till next month. Pretty darn sure they'll show up in the numbers next month. This morning, however, it is the hardest thing for me to figure out, and the reason why I was so confused is the bond yields are up. The stock market is down radically for all kinds of reasons having to do with tariffs and layoffs, and we'll talk about these things. But why is the bond market up? Why are the yields up this morning, meaning that they're selling off? I that's really hard for me to understand. It looks like the Republicans are going to do what they need to do to back up Doge, and that would seem to me to be telling the bonds they should be rallying. All right. But also, nothing has changed in my view of Tesla's value later this year. Nothing has changed in my view that if we have a recession, even if we have a recession or a bear market, or even whether it's flattish or a bear, it doesn't matter. By the third quarter, by the end of the third quarter, country's going to be going crazy. Tesla's going to be going crazy. Stock market's going to be going crazy. And Tesla's valuation will be where I've said it was going to be, 700 plus. Because these are the four reasons why the stock market will be doing great. Okay, write these down, bookmark this. The reset that Trump is doing right now, Doge, tariffs, the worldwide reset with regard to peace, all that reset will be done. Number two, the AI systems will be starting to impact productivity in a major way. I'll tell you more about that later. And number three, interest rates will be low. Even if they're going up this morning, they will be low by the third quarter, very low by the third quarter. And number four, optimism will be high. And there you go. Those are the four reasons why things will be great by the fall. Okay, from Tesla Roddy, the Tesla Model Y led South Korea's imported car market in February 2025 with 2,038 units sold, according to Korea Automobile Importers and Distribution Association. Total car registrations climbed 24%. That's really, really good. Tesla ranked third among all brands at 2,222 units behind BMWs and Mercedes-Benz. The Model Y Classic is still a strong seller, it says. The Model Y performed well in South Korea last month. The Classic variant, which Tesla is already phasing out, Strong sales highlight Tesla's rising presence in South Korea, where BMW beat Mercedes-Benz for the top brand spot. All right, now this from investing.com. Despite near-term caution, Baird remains long-term positive on Tesla. Oh, it sounds like me. Due to long-dated initiatives such as the launch of Optimus Robot, robotaxi service, expanding FSD, ramping sales of the more affordable vehicles. Baird lowers its price target, though, from $440 to $370, saying that this valuation reflects a premium to large-cap, high-growth peers due to Tesla's growth potential. And the market is taking notice. Tesla shares have plunged 31% in 2025. Why do people use the beginning of the year as a... Anyway, never mind. And the top investor, 𝐓𝐡𝐮𝐻, 𝐄𝐦𝐚𝐢𝐥, I looked him up. He is a top investor, warns the worst may not be over. With Musk splitting his time between government shakeups and corporate leadership, Tesla's stock could have more turbulence ahead, he says. Elon Musk's political involvement, particularly his support for Trump, is alienating potential customers and causing reputational damage to Tesla globally, according to the 5-star investor. The fallout is already visible. Tesla dealerships have been vandalized. Anti-Musk stickers are plastered on cars. European sales cratered 45% in January, but that was the Model Y changeover. Canadian MP who's eyeing the prime minister seat is openly pushing for a 100% tariff on Tesla specifically. These countries around the world now, some of the countries are starting to want to punish Elon Musk and Tesla specifically. Makes no sense to me. Vandalism and protests against Tesla are intensifying, reflecting widespread disappointment and potentially impacting Tesla's sales and investor confidence. I would say it differently, Mr. Tony. I would say that these are leftist radicals who damage and destroy things every time they get a chance. And right now, they're just using this as a symbol. And I think this too shall pass. The situation is spiraling quickly, he says, and Tesla's global reputation hangs in the balance. Of course, people to the right are stepping up and buying the vehicles because of it. The company has already struggled to maintain its once explosive growth, but now, according to the investor, it risked losing the one factor that kept its stock from an all-out collapse, which was investor faith in Elon Musk. I would say that most investors have as much faith or more, and new Republican investors are probably looking and going, they're all in on Elon, who would have never been so in the past. And we now have the receipts for that. If you've been following the channel, we had actual polling numbers the other day showing that Republicans are replacing liberal or Democrats as are liberal conservatives replacing liberals with regard to Tesla interest. Seeing further downturn, Catoni rates Tesla currently a sell. And that's the end of that story. Okay, X wins a First Amendment case against California. Permanent injection blocks a censorship law. You may remember that they put up this censorship law. It was crazy. X just secured a major victory in its First Amendment lawsuit against California AG Rob Bonta, blocking the enforcement of AB 587, a law aimed at regulating speech on social media. The Ninth Circuit Court ruled in X's favor, issuing a permanent injunction against the law, marking a landmark win for free speech. Elon's platform remains the only major social media company actively fighting censorship and winning. Go Elon. Okay, this following article is a little bit thin, but I thought I should report it. Tezzerati, again, Hyundai Motor Company, is diving into robotaxi business with a Texas-based startup, AvRide, AV Ride. What's called AvRide. Hyundai and AvRide's autonomous ride-hailing service will roll out in Texas later this year. The South Korean automaker and its new partner plan to develop driverless robotaxis based on an all-electric Hyundai, the Ioniq 5. Last year, Hyundai's Ioniq 5 robotaxi passed a U.S. driver's license test. Hyundai's robotaxi is a level 4 autonomous vehicle certified by federal motor car vehicle standards. But I'm wondering, what are the limitations? Do you guys know more about this? Please put it in the comments if you know more. Jeff Lutz says this. He's responding. First, let me tell you what he's responding to. So, Stock Talk Weekly said Walmart asks Chinese suppliers to cut prices to compensate for the tariffs. And Jeff Lutz says, but I was told this would never happen. It's 100% either the consumer or the importer that has to pay the tariffs. Oh, no, not true. By the way, what have I been saying for a year about tariffs? Look, tariffs, this headline is probably a tad bit misleading. I doubt if Walmart or whoever this is, Walmart, I don't think Walmart went to the Chinese and said, please cut your prices. I think the buyers, the salespeople are going into when Walmart goes over to China and negotiates. These are happening across the desk, and I've been there, and I'll tell you what, Walmart's not going to accept these price increases based on tariffs. They're going to find another way. Unless there's enough price elasticity. But as I've said over and over again, if you were willing to pay $12 for eggs, for a carton of eggs last year, why didn't Kroger raise the price to $12 last year and make a lot more money? Anyway, Walmart asked Chinese suppliers, Okay, the beige book, here's the results. Did I miss something here? I think I missed something. This is Randy Kirk. Please hit like, subscribe, and notify. I have a new Patreon member I wanted to comment on here, but I can't find it now. Where did he go? Yeah, somehow things have gotten out of line here. Oh, well, I guess I'll just have to come back to that later. All right, so let's go to the beige book, the Fed's beige book. Here we go. Slight increase in economic activity. The economy saw a slight rise in activity from mid-January, with most districts reporting stable to modest growing conditions. Number two, cautious optimism for the future. Business expressed slightly optimistic expectations, but that was down from where it was, where they were more optimistic earlier. Labor market stabilization. Employment levels were steady to slightly up, with hiring activity is described as sluggish. Okay, but that was 30 days ago. It's going to get worse. Modest wage growth. Wages increased at a modest to moderate pace across most districts, reflecting a slowdown where they were higher. But we'll see some other stats on that in a minute. Persistent inflation pressures. Prices rose moderate overall, with selling prices and input costs increasing modestly. A lot of the people were saying they could not pass along the price increases. Duh. And if it's because of tariffs, it won't make it any different. It doesn't matter why the price increases happen. There's not full elasticity in pricing. Mixed consumer spending. Demand for essential goods held solid, but discretionary spending weakened, particularly among lower income households. Larry and I have been talking about that for a year. Real estate variability. Housing markets showed mixed results. Some districts reported solid activity with slight price increases, and other districts noted softening sales and low inventory impacting affordability. Nothing here. I'm sorry, Nicholas Gibbs, I'm not hearing anything about housing prices going down. Might be in Florida, but nationally, I'm not hearing it anywhere. I can't find any stats on that. Manufacturing weakness. Manufacturing activity declined in most districts, with contacts citing softer demand and competitive pressures, though some sectors were showing some resilience. Agricultural challenges. Agricultural conditions weakened in several regions with lower farm incomes. A lot of weather-related issues over the winter. And then finally, uncertainty as a dominant theme. This is, again, you got uncertainty is definitely the theme. Potential tariff policies, immigration changes, geopolitical factors, all impacting uncertainty. 100% agree. All right, today's Thursday, so we had initial jobless claims reports showed a decrease back to 221,000, about the normal. The figure beat economists' expectations of 233,000, and it dropped from last week's 242, which is kind of what I said the other day, wasn't it? Okay, despite recent economic turbulence, including federal layoffs, and Tesla's related unrest, the lower than anticipated claims suggested resilience amid the uncertainty. Continuing claims rose slightly to 1.897 million. Analysts view this as the calm before the storm. I agree 100%. This from the U.S. Bureau of Labor Statistics. They released the revised productivity and cost report, which was excellent. The non-farm business sector productivity growth was revised upward to 1.5 from an initial 1.2, surpassing expectations of no change. This uptick reflects a stronger than anticipated output per hour, driven by technological adoption and workforce adjustments among economic shifts. However, unit labor costs rose by 2.8%, slightly above the 2.6 expected. And we continue to see, it says hourly compensation increased by 4.4%. And this is not what we want to see. We need that to drop down to around 3, and then inflation to drop down to around 2, so that we have a positive number for the folks. But this is too high. The productivity growth of 1.5 remains below the long-term average of 2.18%, hinting at challenges sustaining economic momentum. I don't think that'll be the reason. Okay, productivity will pick up later this year. Well, first of all, as we have all these layoffs, and as we have all of these changes, it's going to really make a big difference in productivity. Analysts see this as a mixed signal. The upward revision is encouraging, but slowing productivity growth compared to 2.3 suggests firms may be struggling to balance costs and output in 2025. With continuing claims edging up, the data underscores a labor market navigating uncertainty, potentially pressuring policymakers as they eye inflation and employment trends. I told you we had a lot of reports out this morning. So we also have this from the Census Bureau and the Bureau of Economic Analysis reporting a record-breaking January trade deficit. This is not surprising. It was up from a revised 98 billion last month to 128 billion. It was forecast to be 128.8 billion, which would have already probably been a record, but it actually came in at 131 billion. So you know what's going on here. This is people they're buying up imported products before the tariffs take effect. And this from Challenger Gray and Christmas. They are a global outplacement and executive coaching firm. They report the layoffs each month. Reported layoffs, large reported layoffs. They said this morning a significant surge in U.S. planned layoffs for February, reaching 172,000, the highest since July of 2020. This 103% year-over-year increase is largely attributed to substantial federal job cuts under the Department of Government Efficiency, DOGE. Federal layoffs, totaling about 62,000, are a key driver, although you were not going to see these until next month's reports, as I mentioned earlier. But there also were some private sector layoffs. Southwest Airlines, 1,750 jobs, Chevron, 8,000, Starbucks, 1,100 corporate roles, and HP with 2,000 being laid off. The economic slowdown, AI-driven automation, cost-cutting efforts amid uncertain market conditions, these were all four noted as contributing factors. Meta had 3,000, Estee Lauder 5,000 to 7,000. Were overstaffing, they said. Analysts suggest that these trends may signal broader economic challenges, although the private sector's capacity to absorb these workers has been pretty good. Not sure that is going to be true, though it's going to be way too many for the private sector to absorb. Now, but people are going to get their, whatever it is, 12 weeks or something of unemployment insurance. And I do think that as the interest rates come down, we will see increases in those sectors that have been underperforming previously. Anyway, the market started out way off this morning, and it is recovering fairly well. So we have Tesla right down 3.3% at 269. So remember, Brian Wong keeps telling us that 265 is that really solid support, which it has not been able to break below. It might, and he said that as well. Okay, we got the Dow Jones down 0.55%. It was down over 1% earlier. The NASDAQ down 0.92%. It was down 1.5 earlier. And the S&P is down 0.83. It also was down a lot more. So all of them are bouncing back a little bit. That's what I'm saying. Extreme resiliency this morning. Very shocking resiliency. But like NVIDIA is still down 2.2%. And the Magnificent Seven is mixed with Apple and Google actually, and Microsoft, all three slightly up. The Cathie Woods are also red and green, half and half this morning. Okay, but here's my shocker. Here's the one I can't get. I can't figure it out. And I'm looking for you guys to let me know in the comments below, why in the world is the 10-year up 6.7 basis points this morning? I mean, is this profit taking? I mean, we're sitting at 4.336 again, way over my 4.25, my breaking point. Fortunately, nowhere near 4.5, but this is not the direction that this is, just Randy hoping. But I mean, I'm thinking that with what Doge is doing and with the Republicans now backing Doge up, I would think that the interest rates would be continuing down. But right now, not the case. 2-year up 1.4 basis points, 2-month actually flat this morning. Oil actually a little bit of bargain hunting there, up 69 cents this morning. Oops, I'm looking at the wrong thing. I'm very sorry. Oh, everything changed since I last looked. I just looked at things wrong here. Oil is actually down this morning, 17 cents, $66.14. Remember, my prediction here, along with Nicholas Gibbs, is that we will be in the 50s. I think Brian Huang believes that as well. Natural gas down 2.31% this morning, $4.35. Remember, we were under $4 a week ago. We'll see if we continue in that direction. Gold this morning down 6.7, $6.70 at 2,919. But staying over 2,900, interestingly. Silver continuing up, actually, holding at $33.20. Copper is down 0.15, right about where it's been for a while at 4.78. The dollar is mixed depending on which currency. And Bitcoin up 496 at 90,804. In the has recovered from its drop, but sitting kind of in the middle right now of the overall. It's been as low as, it went into the 70s. It's been 109. Now we're sitting at 90, almost 91. All right. And that is all that we have here in terms of the news this morning. What is today? Today is Thursday, so that means you will have Cern Basher tonight at 7:45. You will have Bradford Ferguson at about 5 o'clock. You will not have a fourth show today. That was an unusual day yesterday. And if you didn't watch Brian White's show yesterday, why not? Now, last night's Jeff Lutz show went nuts. You guys really liked that show. And Brian Wang's show last night did very well also. That is the one, however, I'm going to point to because that's the one I think is the most important for you to watch. So there you go. Go back and take a look at Brian Wang, the program that we did last night. Like, subscribe, notify, all that stuff, and join Patreon as we had our one person today. I'm going to take another 1 second to see if I can find that, because we should give him credit for joining up. Here we go. It's Jurgen H. Thank you, Jurgen H., for joining up, a new Patreon member, and maybe some of you will take that as a hint. We need more. Jurgen H. by himself will not be enough. Thanks for watching, and we will, we're going to take one more look at Tesla just before I go? All right, sure, we'll do that. Down 3.38% right now. That is $9.43, sitting at $269.67. So, better than it was, worse than it was. Who knows where we end up for the day? Although I would say, in general, the markets, even though they're topping off right now, in general, I would say the trend is up and to the right. It's been great talking to you.